Welcome to the first of many Money to the Masses roundups. What we're going to do with these videos is going to be very rough and ready, very casual. I'm going to bring a bit of insight to a couple of key headlines during the week, and while I'm making the newsletters which I send out to you guys um, over the weekend, I just want to sort of bring a little bit more insight in the form of video. We do a lot on podcasts and a lot of written content. So the big news stories this week were really centered around investing. Now, for the investment markets, they've been fairly buoyant. The first live presidential debate over in America saw Hillary Clinton edge it slightly over Donald Trump, which the markets enjoyed. Now, historically, the presidential terms of Democrats have actually been better for markets. They've had an annualised return of about 10% versus 1% for Republicans. Now, that's a 4-year term that we're talking about. There are a lot of outliers in there. I wouldn't take that figure to heart too much, but the idea is the markets want Hillary to win, and they think she's edging it at the moment. And Donald Trump is seen as a loose cannon. Elsewhere in markets, OPEC, who are the group of oil-producing nations, had a meet-up, and Saudi Arabia and Iran made some agreements to try and stabilise the oil price, which is good news for energy stocks, so that rallied as well. So we had a good week. The only thing that was a slight knock on the Friday was Deutsche Bank. The European banks have had a lot of problems this year. Early sell-off in January this year, and there's been bits and pieces since then. And Deutsche Bank has obviously got its own problems with regulators and fines, so that's one to watch that's unfolding. There's been a bit of a rebound, but it's something to watch that could come out of make a few more problems. Other stories this week. There's one actually that was perhaps not surprising. The average person has less than £100 saved in their bank account. So millions of people have less than £100 in savings. Now, that doesn't surprise me. The reality is we're always told to have financial buffers, but most people can't really save them because the reality is that we have other things to spend our money on. So this week in the podcast, go to moneytothemasses.com/podcast, and I cover in detail other ways to be able to build a financial buffer, even if you haven't got money to save. So make sure you listen to that. And the other piece of good news is that the UK economy rebounded slightly in the second quarter. Well, the word rebound is probably a little bit strong. Actually, the figures for the second quarter of this year, the GDP figures were revised upwards, only marginally, 0.6% growth to 0.7%. So we won't be punching the air, but it's a positive mood. And if you couple that with some of the indicators that the UK economy post-Brexit, because obviously think the second quarter was before Brexit, the stuff after Brexit has been more positive than people expected. That is good news, although we still don't know the full implications of a potential Brexit, because as we've been hearing this week, we obviously haven't Brexited, but there's a lot of stuff been going on in the world of politics with various politicians promising a nice smooth Brexit, but people across the channel promising something a lot harder for us. So stay tuned for these videos. There'll be more of them every week. If you want to ask questions or want me to cover any topics, then please do send an email to me at damien@moneytothemasses.com, or ping something to me on Twitter at money2, that's the number 2, money to the masses.